know in order to navigate the sometimes confusing markets and guide you toward financial wellness. Reach out to them for advice at 855-DON-GINO. And now back to your hosts, Don Getling and Gino Franti.
Well, we are going to suggest that you do reach out to us. We've been now on the air at KHTS, sharing with you what you need to know, want to know, and being accountable to our community with these great professionals. We have found the best of the best, and we'd love to share these great professionals, whether it's in attorneys, whether it's CPAs, whether it's financial planners such as Chris Ingram, real estate professionals like Pam Ingram with RE/MAX. We have the best of the best. So please reach out to us go to donandgino.com. You get a lot of our information there. We have our Facebook page. Like our Facebook page. We like to be liked. Please. A lot of good
Don,
information.
you need that, right? You need more people to like you.
I totally do. I'm a very insecure individual. So please like me on our Facebook page at Don and Gino. Yeah, I'm very shy. That's why I have the face for radio. And then you can reach out to us at donandgino@gmail.com. donandgino@gmail.com if you want to just send us an email with some questions, or call us 855-DON-GINO, 855-DON-GINO. And believe it or not, that calls Gino and I at the same time, so we see who answers the phone the fastest, or see who can let the other one answer it.
I was going to say, I'm really good at the latter.
Like, I guess I'll get this one, Gino. But it does actually ring us, because we do want to stay connected to you, and that's why we'd love you to like our Facebook page, again, at Don and Gino Radio. That way we can keep in touch with you all week long, not just on Thursdays, 12 p.m. to 2 p.m. Remember that, Thursdays, 12 p.m. to 2 p.m., and we share with you, again, great topics like we've had today. Great information about the IRA. A lot of people didn't know they can purchase investment properties with their IRA, and the details. I love how you guys went in details. And we're here with Chris Ingram with Infinity Wealth Management and Pam Ingram with RE/MAX of Valencia. Let's talk, Chris, real quick about the volatility in the stock market, because we've been warning people. Thank you for being on the show and jumping in with us and having an opinion, saying be careful. Mm-hmm. We're at all-time highs, so you got to be prepared for potential corrections, which are actually good things. We need those corrections, because otherwise we have a crash. We don't want crashes. Corrections are okay. Same thing with interest rates.
Right.
So explain why it's been a little more volatile lately, and what our listeners, all of you out there, should be thinking about, other than, of course, calling Chris and eliminating the heartache and the stress, because Chris will take care of that for you. He'll pass the ulcer, as we say.
Right. Yeah, I mean, the Fed began tapering at the end of last year, and the Fed was driving a lot of the market performance over the last several years. So there was some concern. The initial reaction was good. It seemed like the market liked the beginning of the taper, but then it started to hesitate a little bit. We got some economic data that was not as rosy as people had hoped for. And so now the Fed's tapering. Economic data is not looking so great. There's some issues overseas in emerging markets, which people are concerned about, a slowdown in growth over there, which, spills over here.
Global economy now, huh?
Yeah, definitely. So all of that played into a very volatile January. When January was just a downright negative month for the market. First real negative month we had seen since August of last year. And so people started to get nervous. What am I going to do now? The market's going to lose all of its returns that I got last year.
There's not usually panicking when they start seeing the market turn, right?
Yeah, I mean, it's amazing how fast it changes. And really, if you look at the numbers, it really just took away, some of the returns for the market from December. I mean, we still had a fabulous year last year, and it didn't take away nearly that much. But it's amazing how soon people start to panic and worry. Yep. And
that's why we warn them on the show all the time, so they don't panic. I mean, that's about knowledge. Helps you avoid panic, and panic is never good, period.
Definitely.
I don't care what the situation is, panic's not good.
Right.
So being educated or prepared makes all the difference.
Prepared. And, and February's bounced back. So just to show those who panicked in January and sold out of their portfolios because they thought it was all coming to an end, they've missed out on, a very nice February that we've returned back. But the thing, we talked about it, I think at the Christmas show, maybe even a couple of times in shows prior to that, was to not get emotional, not panic, sit down with your advisor. If you don't have an advisor, get one. And think about your personal situation. What is your risk tolerance? More importantly, what is your time horizon? When do you need these funds? When are you actually going to use them?
That's got to be imperative, Chris, because a lot of people, a lot of us, including myself, a lot of you out there are going, I'd like to retire by, but if there's no plan, years go by. I mean, literally fly by. We all know that because I know, piercing older ages as we speak. And if you don't have a plan, all of a sudden it almost is too late, at least to hit the goals you want, whether it's a timeline goal of when you want to retire or the amount of money you want to have in your account. So, of course, talking with someone like you, at least you can give them a plan. Now it's not always the best plan, but I bet your clients feel more comfortable just having one.
Just knowing that we have some kind of plan set in place and some goals that we're trying to accomplish is huge. It goes back to that thing. I get people all the time, they come to me and they say, I may need this money over the next 3 to 6 months, but I really want to make a bunch of money on it over the next 3 to 6 months. That is a time horizon issue. That is not, don't go trying to make a bunch of money on your money in 3 to 6 months when you need it.
Yeah, go watch that movie, Wolf of Wall Street. That'll help you.
Right. It's just dangerous. You're going to
is.
end up losing a portion of that money. It's just Murphy's Law. It's just not a good idea to try and make quick cash in the stock market. I mean, it's just as good as going to Vegas at that point.
I would call that
like buying a lottery ticket.
Yeah.
I'd call that Getling's Law. Murphy was an optimist.
But then I have other people, they come to me and they say, I'm thinking about retiring next year. Should I get ultra conservative with my portfolio? And I'll do some analysis and I'll say, when are you going to start actually pulling money out of your IRA? Well, I'm not actually going to need the money from my IRA for probably another 10 years. I'm going to retire, but I have these other funds that I'm going to live off of, or this pension or this annuity payment that's going to take care of me for 10 years. And then I'm probably going to feed off of my IRA. Well, that IRA has a time horizon of 10 years. I don't care if you're retiring next year.
It doesn't affect
You're
it.
not going to need this money for another decade. So we invest it like we're going to have it in this account for the next decade. So it changes our time horizon and changes the way that we position the portfolio and what the allocation looks like. If you listen to me at the end of the year, you reallocated, you fell back in line with what your risk tolerance, your time horizon, and everything looked like. It forced you to take profits in things that did really well last year. It forced you to reinvest into things that didn't do so well last year. And when the volatility hit at the beginning of this year, it probably didn't have as big an impact on your portfolio because you took the time to reallocate. One of the areas you probably reallocated to was real estate, because it didn't do so hot last year. It's up, REZ, an ETF, a real estate exchange traded fund. It's up close to 10% for the year. So if you reallocated, you didn't feel it as much as if you didn't.
Very good. Very wise word from Chris Ingram with Infinity Wealth Management. Well, we have a treat. Thank you for that, Chris. And you made me feel more comfortable already.
Yeah,
I'm relaxed here now. All right. So the good news is we have the dynamic duo here of Chris Ingram and Pam Ingram, two of our best professionals. We have them for another half hour because this is a 2-hour educational show for you every Thursday, 12 p.m. to 2 p.m. So we're going to bring Pam and Chris back because we have some more great topics to share with you because they can team up to help explain, there's some concerns regarding rates going up, interest rates are going to go up, and some other opportunities you need to know about when we come back to the Don and Gino Real Estate and Finance Show on your hometown station, AM 1220 KHTS. We'll be right back.